I'm joined now by James Bevan, Chief Financial Officer of the Specialist Investment Management Company, CCLA. Thank you so much for coming to speak to us. I just want to pick up on what Manus was saying about Goldman Sachs. Of course, investors looking ahead to these earnings, which are key. And if we look at the earnings from the likes of JP Morgan, Bank of America, Citigroup, each company seemed to show a significant decline in investment banking activity. Can we expect the same from Goldman Sachs?
I think that there are two issues. One is that Goldman's has clearly been ahead of the pack in landing deals and executing, particularly in the fixed interest markets where it's made a lot of money. The second issue is I think we're going to have to put a lot more store in this reporting season on the statements that companies make rather than the numbers. We all know we've been in a rather strange economic environment where we've had government and central bank measures to prop up economic activity. It's going to be really interesting to see what companies now think lies ahead.
So will Goldman be able to stay ahead of the pack, as you say?
Well, the big issue for me is this SEC closure. It's only a couple of weeks of income for Goldman Sachs, so actually a relatively modest dent in their position, and I think that they will come out with numbers that please the street.
So do you sense much optimism in both US and European markets this earnings season?
Well, you know, I look at the US and everybody's talking about companies coming to the market demonstrating better than earnings expectations. But I do think that the US equity market has travelled very fast already, and there's a lot of optimism built into the way that people are positioned in their portfolios. Contrast, everybody's been gloomy about Europe, and I think Europe actually is a much more interesting area for investors right now.
Why is that?
Well, I think that the challenge of the euro and the fiscal consolidation look overdone relative to the fundamentals of many great companies across Europe. Europe, on the other hand, is now benefiting from the weakness of the euro in terms of its export potential, and there are many great quality companies, Roche, which obviously is a Swiss franc company, but Danone and Unilever, NV, very, very good global companies.
But are there also companies that have been adversely affected by currency fluctuations?
It will always be the case. The currency fluctuations are hard to tell, and I think the key that we need are companies that are exporting competitively, and they will be able to generate extra translation benefits when they come back to the UK, to their domestic markets.
So on the whole, how do you think European companies will compare with those in the US?
I think that they will compare quite well, both in terms of the statements they came out with. After all, we had Philips coming out with excellent numbers yesterday, and I think more importantly, their statements about what the future will hold will look very benign, and therefore I suspect that over the balance of the year, European equities are much better placed than US equities.
But will investors be focusing on what you're talking about, or are sovereign debt concerns going to dominate sentiment?
Sovereign debt concerns are really important right now to sentiment, but I'm always amazed when people talk about the problems of Greece as if this is an extraordinary situation. There are 23 US states that have a worse fiscal position than Greece.
So you think investor focus will increasingly turn to America's mounting budget deficit?
Well, and also more particularly the sustainability of economic recovery, which is critical to the whole challenge. How do governments pay their bills? And then also what are companies going to do? And I think that the news from companies, and therefore the forward-looking statements from companies about their order books, about their margins,
whether or not this
critical.
Optimism can be sustained going into the second half of the year.
Right.
So with that in mind, what is the best investment strategy in your opinion in the current economic environment?
Well, I think, funnily enough, I would be underweighting Japan, which I think is a deeply contrarian call relative to fund managers who say Japan's the place to be. But I think Japan has real fundamental problems in terms of the reorganisation of its politics and its corporate regulations. And I think the valuations are still very rich. In contrast, I see UK and Europe very, very sensibly priced.
James Bevan, thanks so much.
Thank you.